Listen, you not only have a gifted mind, but you're also composed. You don't give in to your emotions. You think logically. Ben, you were born for this. You'll have more fun than you've ever had in your entire life. It's perfect.
The goal of a trading system is to do what? We want to find the highest probability, lowest risk point of entering a move in the market. Any move. And again, when I talk to traders, what I always do is I want to show them in any way that I can, typically with questions asking, that they have no definition of anything. Nothing's quantifiable. I like to see the market moving up with strength. Define moving up. Define strength. Can't do it. And again, if I can't quantify it and I can't do it, then it's subjective, so it's open to interpretation. It's the same thing at work in the markets, traders, that's at work when 15 people see an accident. They're all standing on the same corner, and yet they give 7 different accounts of whose fault it was and whatever. It's because they viewed the accident through their current beliefs, their current thought processes. So it goes right through what? Social filters? Go through religious filters? If the guy's driving a Mercedes and I can't stand people that have made money and success because I haven't, I might judge that individual. It's his fault. Clearly driving that big old Benz as fast as he was. So assign value to this. It becomes so simple then. Right there, we just broke structure. I have no idea what's going to happen next. And that's where we live 99% of the time in the markets. We never know from one minute to the next what's going to happen. We can project with Fibonacci. Okay? We can speculate based on an upcoming news event. We can use structure. And then we look at that and we say historically when this, and this have happened, this tends to happen next. As an example, in the S&P 500, if you bracket out the high of the first hour and the low of the first hour, if the high of the first hour is taken out, 70% of the time the low of the first hour is the low of the day. You could run a back test and find that statistic. Now, that doesn't mean that any given quarter won't under or overperform that 7 out of 10 number. There will be some times when it feels 85% and is 85% accurate. Maybe there's no volatility in the market, not a lot going on. Then you take a quarter like last quarter, most volatile quarter in history, and maybe those numbers went down. But over a larger data series, let's say 300 events, we come right in at that 68 to 71%. Well, why can we say that? Because we quantified it. The first hour of the market always is 8:30 to 9:30 Central Time. There's no discretion there. Did the market take out the high of the first hour? It's a yes or no question. If it did, then the lows of the first hour are going to be the lows of the day, 7 out of 10. We've got that data, we've got that information and that statistical fact. What do we do with it? Well, now you've got 500 different options about how to trade based on that information. Well, do I buy the breakout of the high of the first hour? I don't know. How does it work? Where do you put your stops? Where's your target? How many contracts? Most importantly, what's it done historically? But right here, what we do is we take a look at the data and a hurricane tracker, like we watch the weather every day, 47% chance of rain tomorrow, because when this criteria is met and these conditions exist, this tends to happen next. History. All we're doing right here in the markets is saying, okay, history repeats itself. Why? Because traders are human beings, and we have emotions. And people basically respond the same way to pain and pleasure, fear and greed today that they did 10 years ago. And that's represented in the markets every single second. The market is open visually on the charts for us in what we call bars. So right here, this 89 tick bar is 89 tickets in the market. And then, of course, we read Japanese candlesticks and these patterns in the open, high, low, close. And all the other data on this chart is derived from price, which is a visual representation of the underlying psychology of all the participants in the market right now. The market, this one massive thing, is always right. It is bigger than any one of us. So if you just accept the fact it's always right. Don't try to say, I'll make money if the market does what I think it should do. Illogical, guaranteed, based on my experience, way to lose money. But I can see patterns in the market. And I can see market tendencies by looking at price charts. But again, I have to look at them with the filtering. I've got to filter the data. Extraneous data. irrelevant data, stuff that's not relevant to my cause. It's the power of focus. I'm focused on identification. And as that lower low sets up right there, I'm not thinking anything else other than A, there's a lower low. Now we expect, I call this an outside return to a lower high. And I say it the same way every time. And that's been reported to me for the 14 years I've been in the markets, or 13, and for the last 7 or 8 that I've been teaching. Todd, when I start to see it, or I identify it before you say it, or I hear your voice in my head, they start to see it and they have that internal dialogue. That's when I know they've got it. All right, so now that we have that data and we have that information, we either believe it, or number 2, we go test it so we can internalize that belief for ourselves. Reticular formation, reticular activating system. Forget what it looks like. It filters incoming stimuli, which is what? What we see on the chart. It filters that. Cool part is we get to train that dude. Okay? This ugly looking reticular formation right there is yours to do with what you wish. It is the subconscious mind. It is the power of repetitive thought, which leads to repetitive action. It is employed and applied every single second of every single day of your and my life. It is what affects who we are, and who we are affects what we do every single second of every single day of our lives. And our lives are directly related to the quality of the decisions that we make every single second of every single day of our lives. So you can choose to now take 30 minutes, go knock down some carbohydrates, eat your favorite lunch, whatever it is, and then get back and practically apply what we've just discussed. And I will tell you scientifically, when you do that, your retention of what we just covered for the last 3.5 hours is going to be increased 300 to 500%. If that's at all exciting to you, encouraging, then do that. Or I could go back to doing what I normally do and go flipping around through charts looking, ooh, that's kind of neat. Whoa, what's that is? Whoa, why did that move? And I'm not going to say that would be a waste of what we've just gone through, but it would be a poorer use of that time. Now, if I'm a ratio trader, I go back in and look at tendencies and do the ratio trade. The bottom line is focus on trading plan development. Get excited. Understand that the power of the reticular formation is at your fingertips. It will do what it is asked to do. It will focus on what it is shown to focus on.
We've discovered that the enemies of successful trading are powerful psychological barriers erected by our minds in response to the massive influx of information. In the absence of an if-then action statement, our minds will revert to a fight-or-flight status, causing us to hold losers, cut winners, and make mistakes endlessly. A trading plan is a set of if-then statements that embodies a trading system with statistical relevance. We know what to look for and how to act immediately when we see signals. Our trading plans are based on systems, which reflect a statistical edge based on repetitive human behaviors. Traders with unconscious competence can take advantage of these patterns. This competence has roots born from the repetitive backtesting of our systems hundreds of times and needs continual attention and coaching. But in the absence of distractions, our repetitive laser-focused actions can lead to profit and success when we make quality decisions.